Hey guys, hope you're all doing really well. Look, I just wanted to run through an example of a trade that went down on gold yesterday. But before I do that, like I do with every video, I just want to run through the strategy that I use. It's made popular by Trades by Sai, and the strategy is called the ICC strategy, which is a trend-based strategy. So, what does ICC stand for? ICC stands for Indication, Correction, and Continuation. Again, it is a trend-based strategy, so the market either needs to be in an uptrend or a downtrend. And when we're marking up our charts in particular, so when we're looking for these formations, we're looking to focus on the 4 hour and the 1 hour time frames, or basically whichever one looks most clean. Sometimes the 1 hour might look better than the 4 hour, and if the 4 hour looks better than the 1 hour, we just want to make sure that the 1 hour and all other time frames then sort of essentially follow that trend eventually. So if we're looking for an uptrend, we're looking for characteristics of an uptrend on the 4 hour, 1 hour, and all other time frames as well. That's the key. So marking up our charts on the 4 hour and the 1 hour, let's run through an example of an uptrend. So an uptrend, we start with a low in the market, which then creates a high, then a higher low. It's called a higher low because it's higher than the previous low. Once then this forms, we then want to wait for that higher high to form, and that higher high is our first phase, which is the indication phase. So at this point in time, we draw our level of interest on that previous high, and we've already got that indication. It's created the higher high. Now the second phase is the correction phase. So this is when price then comes back, corrects below that level of interest, but it doesn't break that previous higher low and creates another higher low. Now at this point in time, once the correction is complete, we can scale down to the 15-minute and 5-minute time frames to find the characteristics that support the overall trend. And in this example, it's the uptrend. So we're scaling down to the 5-minute, 15-minute time frame, and we're looking for the similar characteristics. So essentially, we're looking for higher highs and higher lows, but on the smaller time frame. Then when price then starts to break above our level of interest with some velocity, that's when we can look to take an entry. And this will then play out the third phase, which is the continuation phase. So we enter here at the level of interest. We then, for me personally, I take profit at the halfway point between the entry and that previous higher high, and also have a target at that higher high area, and hopefully let the trade play out. Now stops usually go just between a logical area, usually the previous swing low. That's generally what I do, and I think generally what most people that trade ICC do as well. So that's an uptrend. Now the reverse of that is a downtrend. So essentially we have a high, starting with a high, then a low, creating a lower high. It's called a lower high because it's lower than the previous high. Then creates the first phase, which is the indication phase, which is also that lower low. Very similar to that, the uptrend formation here, but just the complete reverse. We're going down in this instance. In the example before, we were going up. So we've created that indication phase in that lower low. We then want to we then wait for the correction phase. Create the lower low, then we draw our level of interest. Then we wait for the correction phase. We wait for price to break above that level of interest, not breaking above that lower high. Then at this point in time, like we did with the uptrend, once the correction is complete, which is the second phase, we scale down to the 15-minute and 5-minute time frames to find characteristics in support of the overall trend. So we're then looking for lower lows and lower highs once price breaks above this level. And when price starts breaking below this level again, we're then looking to enter on the continuation phase. Overall targets at the lower low and the halfway point, my preference. And then we let the trade play out. And then that's as simple as it is. Now, I'll also, in a previous video, I mentioned there was a bit of a checklist that I sort of follow. I'll just quickly bring that up and we can run through that. So this is the check. Whoops. Wow, that is. We'll just run through it like this. So yeah, this is the checklist that I run through every day usually. So we want to draw those levels of interest when we see them. I'll run through the example before, after this checklist explanation. And you'll know now that I'm drawing essentially these levels of of context, which is based on the volume profile a tool essentially. So that incorporates the value area high, the point of control, and the value area low. But I'm using essentially just the most recent trading hours session, or you want to call them previous day's levels. That's what I've marked them up as, and between 9:30 and 4 New York time, and that's essentially where there's the highest volume traded. And these levels just provide a little bit extra context. Overall, they are just Confluence tools. It's just to help me get an understanding for where we are in the market. And so we use the previous day levels, or the regular trading hours session levels, and the previous week's levels. So I draw this at the start of the week. You only have to draw them once the Monday starts. And then I draw these once every day has passed. So then I draw the regular trading hours sessions, or the previous day's levels, 9:30 to 4 every single day when a new day commences. So if we're to look on gold and just show you these levels in particular, you can see how well they do work. So first things first, start off on the higher time frames. So you can start off on the hourly or the 4 hour. In this instance, the hourly looked the most clean in this instance. So just to give you an idea and sort of just essentially just play on from what we have run through, I'll get the path tool. So we've got a low in the market, which creates a high, creates a higher low, then creating a higher high. So we know once we get that formation, we can then look to draw our level of interest, because now we've got that indication. We had the low, the high, the higher low, and the higher high, which creates the indication. So at this point in time, we can draw our level of interest, which is so level of interest. So low, high, higher low, higher high. So level of interest can be drawn right here. I draw them on the bodies of the candles. Feel free to draw them on the wicks if you'd like. It's just a personal preference. It's something I've always done. And from the testing and from the trading that I have done, I found that drawing on the bodies of the candles have always been has always worked for me. But do your own due diligence to test that out for yourself. And whatever works, at the end of the day, you have to do what you trust. And this is just a bit of a guide for those that are new, or want to see a different perspective for those that are that are quite familiar with the strategy and just want to, I guess, reaffirm and confirm what they're doing. But so we've got that indication phase. So now we can see that price is now stalling here. It then comes back below a level of interest. So you can see that it spikes out. So we know that once we come back below this level of interest, we can scale down to a 5-minute and 15-minute time frame. So let's do that. So indication, correction. Now we're looking for the continuation phase, which you can see it has played out. So overall targets would be this level here. So let's scale down to the 15-minute time frame. And look at this. So I had these volume profile levels drawn, and you can see just how accurate they are. So the value area high is here, so we can see that it broke down. Point of control is actually really close to the level of interest as well. So we know that this area, there's going to be a lot of activity when it does essentially move away from here, or if it did decide to break down. In this instance, it didn't. We can see that it actually came all the way down to the value area low, almost just touching it to the tick. I think that was, let's just see, 1, 2, 3, 4, 5, like 5 ticks. It went over by, but then just completely retracted. And we can see that this trade actually worked out quite well. So if you're looking at the bodies of the candle in particular, you can see that the body closures of the candles actually didn't break below this level here. We can see that it wicked below this level, but it actually didn't break, the overall structure. The overall structure is still very much bullish based on just what's presenting right now. Let's just see what it looks like on the 5-minute time frame. So if you were looking to get an entry, the best entry to get in would have been essentially when you were confirming that we weren't really moving any lower than this level here. So we knew that we probably could have put our stops here. we can see that price stopped. I'll just zoom in a little bit more. We can see that price stopped here and it didn't break this previous low. So when price came back below here and then started breaking back above, you've got 2 points of confirmation. You've got the level of interest, which we know is a strong level of interest based on ICC. And we've also got the value area levels as another point of confluence. So these are also areas that are where the price is essentially magnetized towards, and also they can heavily repel from these levels as well. And you can see that that's exactly what happened here. So in this example, what you would have done, or what you would have looked to do, was take an entry back above this level, because we know that we're confirming that we are in fact definitely in an uptrend because price didn't break below this level on the smaller time frames. So then we can look to take that long entry when price breaks above here, and ultimate target is up here, and we can see that we did eventually hit that very cleanly, and stops would have been somewhere below here, and that worked out to be a very nice 3.6 to 1 risk to reward, which is perfect. Like that's like an A1 trade that you could have taken there. But that's as simple as it is, guys. Like, if you've got any questions in relation to this, or if you want me to do any more videos on the value area levels or anything like that, I can do my best to try and break it down a little bit further. I learnt this idea, or the idea of volume profile. Volume profile, just for context, has been around for a very, very, very long time, and a lot of institutions and professional traders do utilize it. But I got this idea in particular from another YouTuber by the name of Cami Capital. That's spelled Cammy. Yeah, look, I found his the way that he uses these levels it just provides more context at the end of the day. Like, if you know that you're at a area of discount, which is considered, the value area low, then that's something to sort of consider. At the end of the day, what you want to do is you want to see how price reacts to these levels. So we can see that it halted at value area low and didn't want to break down below that. So that gives us a clue that perhaps we are going to continue in this uptrend. So that's just giving me more confidence in the trade. At the end of the day, price is king, and if you can have just any element of confidence or extra confidence without sprawling your charts with hundreds of indicators or anything like that, then I'm definitely going to do that. And I think the value area levels provide a really good insight to where we are in the market, and can just give you, again, that little bit of extra confidence. You can see that this trade worked out absolutely perfectly. And that was very much in the New York session. The New York session started at 9:30, which was around here. So price broke down all the way down to value area low, the previous day value area low, before then breaking back up again. It was an absolute perfect trade, and I hope you guys caught it. Awesome, guys. Well, I'm going to leave that there. Again, if you have any questions or any comments about anything, feel free to send those through, and I'll do my best to help answer them. If I don't speak to you before Christmas, hope you all have a very Christmas, or however you celebrate it, and wishing you a happy holiday, however you celebrate it. If you like the video, guys, please do hit the thumbs up, and if you want to see more content like this, please do hit the subscribe button as well. I'd be very appreciative. Thank you so much for your time, guys. Have a great one. All the best.